Well, welcome back. We just got a read on July's durable goods orders coming in unchanged, with core capital goods orders up more than expected. It's a big week of economic data. Tomorrow, we will get the second read of second quarter GDP. The PCE is out on Friday as well. Joining us right now to walk through it is the host of Kudlow on Fox Business, Larry Kudlow. Hey, Larry, how are you doing? Thanks very much for being here.
Good, Maria. Thank you.
We've had two quarters of contraction. We are expecting another reading of contraction for the second quarter. What do you think we'll see, and what does it tell us about where we are?
Well, I can't predict revisions. I don't think they're going to be very major revisions. Look, I think the big theme here is we're either in the front end of a recession or we're in a recession, okay? The next interesting data point is going to be third quarter GDP, but we're not going to get that for quite some time. The Atlanta Fed GDP tracker is plus 1.6%, but they haven't updated it in a week. And I want to note here a couple of trends that are very recessionary, very alarming. The housing sector is already, I think, in a terrible recession. You're seeing not declines, but crashing. Home sales, existing and new home sales are crashing. New home starts are crashing. Layoffs are starting to come in now. We're seeing about a, 80,000 plus increase in weekly unemployment claims. That's a very bad sign. Surveys are coming out. CEOs and CFOs are looking to slim down and lay off. Wall Street CEOs are predicting recession, even while their economic departments are waffling. That was one of my favorite New York Post stories yesterday. Inflation remains very high, very bothersome. I don't see much change. I mean, look, Maria, bottom line, this administration, which wants to keep Donald Trump and his free market economic policies away from the White House, this administration has taken a boom 20 months ago and turned it into an inflationary bust. Yep. And it's very bad policies. Very bad policies.
And we've got more coming.
I think those are the key points.
Larry, we've got more coming. The president is planning to use taxpayer money to pay off $10,000 per family. Any family making less than $125,000 a year, he's going to be expected to extend the pause on payments until January. And you know what the Penn-Wharton model says about this. They say this is going to cost between $300 billion and $980 billion. Larry, your thoughts on this student bailout plan?
Yeah, well, it's just so patently wrong. I mean, yes, it's going to boost spending in the economy, so it's undoubtedly going to add some inflation, right? There was no Inflation Reduction Act. All this stuff is inflation expansion. So that's one point. But here's a bigger point, okay? 70% of the taxpayers are going to be asked to finance the other 30%. And that 70%, Maria, is middle, blue-collar, working folks, right? The 30% are a lot of graduate students and people in arts and sciences. I mean, it just doesn't make any sense whatsoever. You want to change, you want to improve the student loan story, put it back into the private sector. It was Obama that nationalized it and put it all into the government sector. At least bank lenders, right, can figure out your credit and your risks and so forth and have a decent payment schedule. So, yeah, this is a very dumb idea. It's election year pandering. That's all it is. I don't know if you saw the other story. There's not going to be any global warming improvement. Bjorn Lomborg, our friend, writing in the Wall Street Journal, that this crazy monster bill. So wait a second. The math here is very hard. We have to be quantitative analysis experts. 9/10,000th of 1 point Fahrenheit. 9/10,000th of 1 degree Fahrenheit is what we're going to get out of this bill that raises taxes on large and small businesses across the board and strangles the economy and puts the IRS armed to the teeth. This is crazy stuff, right? This is not serious stuff. This is not common sense stuff.
So, Larry, here's the title in the Federalist. Studies show Biden's illegal student debt scheme is welfare for the rich.
Yeah, that's right. I think that's exactly right. I mean, this was always a scam because the education department was never equipped to handle $1.6 trillion worth of student loans. And Betsy DeVos would tell you that. I mean, we tried to reform that thing and take it out of the education department. But the only way to deal with this is not to default on the loans, not to forgive the loans, is to put it all back in the private sector. Lending should come from the private sector. Government lending is always inherently flawed. But, Maria, the other point is, you know, the Biden administration, with its big government socialism, right, they do not want Trump's tax cuts and deregulation and fossil fuels. They don't want that back. They don't want free enterprise capitalism, which gave us the best economy in generations. They don't want that on the ballot. And that's what this is all about. That's what this Mar-a-Lago fiasco is all about. It's not just that they don't want President Trump, although I think they're afraid of him too, but it's his ideas that gave us a booming economy for the middle class. They don't want that. They're a bunch of regulatory central planning bureaucrats. That's all this is about. And look at the results. Look at the results. Well, we went from boom to bust in 20 months.
Yeah, we did. And the University of Pennsylvania says this: between 69 and 73% of the debt forgiven accrues to households in the top 60% of income distribution. Unbelievable. Larry, we're going to watch you later. We appreciate your insights this morning.